How you doing, Warriors? Finally happened, huh? An intervention from the Bank of Japan. Hi, AJ, Michael, Richard. I'm going to get the play-by-play by the team coming up. How you doing, Bran? K-Man, Saloom, how are you? Ahoy, Ryan. Are you? Where's
I'm
your
still
boat?
afloat. I'm still
Where's your
afloat.
boat? Where's your boat, buddy? Laura, Paul, how are you? Okay, so I'll start with you, Ryan. So, were you up for these candles here?
Nope, not at
Okay.
all. No, I was short though. I was short. I came very close to getting stopped out. I had my stop at 160.50,
Wow.
and yeah,
That,
unfortunately, I didn't have any orders
oh
in. I
my
was
God.
doing it manually.
Okay. Wow.
So,
3 pips away from your
well,
stop.
depending on what part.
That's a divine intervention. Not
Try
getting
not
picked
that.
off there. All right. Well, nice trade. Uh, what do you think? Long lasting? Are they going to test it? What usually happens after this? Follow up interventions, let the market kind of decide for itself for a couple of days. And do you even
Yeah,
trade it now after, we have this type of huge range?
you can do. You got to be very careful.
Yeah,
We were
yeah,
touting that 160 level.
yeah,
It goes back to 1990, 1986. It's a
yeah,
big level, and it's no real surprise it's stopped up there. The market tried taking the Mickey. Friday I shorted it again on Friday 157.89. Shut my computer down, and then 10 minutes later it went up through 158. So I missed
yeah,
that bit. But then we came in Sunday night. I was in the room doing my options and whatnot. It was trading around 158. I shut down the computer and wake up this morning to find it ran all the way into 160s, and that was
yeah,
enough. 200,
yeah,
220 pips, early hours of the morning, bank
yeah.
holiday in Japan. That was
Okay.
too much. That was too much for them. Too much speculative, too much volatility, and they smacked it. So what do you
Okay.
do for now? We've
Yeah.
had one little move under 155, which was a big level.
Yeah.
We've been holding that for a while. We held that on that rumored intervention last week, or that rate check, that big spike you got last week. We held it. We held it in the first move down on the intervention today. Then we bounced into 157, and it looks like they might have intervened again. That's knocked it through 155, but we've come back and we've held it again. So
Yeah.
for me, we're 155, we're 160 on top. Don't miss around in the middle.
Well, so you wouldn't sell like a rally back at 57 and a half, 58 and be wrong over the
You,
pre-intervention high.
if you want to, the problem is it's so jumpy. There's so much volatility at the moment. You maybe need to let it settle down a bit. There's absolutely no reason why we don't go to 160 again, 165, 170, as long
Right.
as it's in a grind mode, not this,
Yeah.
trying to take the mick mode. So if there's
Until they,
volatility, they're going to hit
yeah.
it. If there's not, we could go to 165, but it'll be a slow process.
Yeah. So, I mean, to have something more lasting happen, they're going to have to move rates, not
Move
just,
rates, or they
yeah.
need the fundamentals to change
Yeah.
in Japan for them to move rates, or in the US, we start getting, the
Easing.
Fed's a bit dovish, the data starts turning south. That's what's happened with every intervention they've
Yes.
done recently. 2012, Abenomics, that turned it around. 2022 into 2023, it was the inflation coming down and the market going all pivot about where Fed rates would stop and turn. So they need something to turn this
Okay.
around.
Oh, speaking about yields, I think we almost got to the 78.6 level. Let me put it on on Friday. 78.6, 474. 74.80. Looks like we got there.
Close enough for
So
government work, as you like to say.
yeah, so I mean, I see two scenarios. Either we're peaking in here this week and pre-market TLT is back inside the formation at 89. Or, you know, either way, I see a sell in 10-year yields. It's either here or it's going to be at new highs. My gut tells me it's going to be here. But, if I guess we have to wait for, NFP, and don't we have the refunding package
And the Fed,
announcement?
and the Fed
Yeah,
Wednesday.
and the Fed. Okay.
Yeah, look
Yeah,
at twos. Look at 2 years. That's your key one as well, and that 5% level. I think that's going to be the decider. If we break and hold a move above 5%, the dollar's going to go. But if the dollar goes but yields don't go, that'll be a different story.
yeah, because it looks like it could, for
Yeah,
another divergent high. Looks like it could. Almost looks like the 10-year could too.
yeah,
Anyway, this is a big week for interest rates, and if it's a big week for rates, it's a big week for everything. Any feel on what's happening in Europe, like the euro still holding here? It's still the
yeah,
weak sister. And I also said over the weekend that anyone who believes this 85 level is going to hold in euro pound, and I know you're one of them.
yeah.
I have some cubic zirconium for sale for your sweetheart.
Well, if it holds
You
again, I'll
want it?
be.
You want any?
If it holds
Huh?
again, I'll buy some off you.
Anyway, I mean, to me, I'd sell a rip to 86 if it happened. And, I don't know if it's going to happen, but I don't trust that bottom. I don't like flat bottoms, Ryan. I
Isn't
mean, do
that
you?
who was that? Was it who sung "Flat Bottom Girls"? It wasn't ACDC. Who was it?
Queen.
Queen was it? That's it. Queen,
Yeah,
"Flat Bottom Girls."
Yeah, who
Uh,
was
not
that?
flat. It wasn't
yeah.
flat.
What was it?
Fat.
Oh, fat was it? Oh, okay. All right. We better leave that
That's
alone in this day and age. Don't go there. Don't go there.
it's a little
Straight to
different.
jail, man.
We'll
Straight
get,
to jail.
we'll get, we'll
Anyway,
get
yeah, do
cancelled.
not pass go. Uh, Metals. Let's go to K-Man. How are you today, buddy?
Hey, good morning, Dale. Morning, everybody.
Um, Looking a little heavy. I mean, weak dollar's not helping it much. Silver,
Mm.
hasn't really recovered from this initial sell-off. So the breakouts down here, I think we'll test it.
Well, I hope they test it
25.80.
down there just
Yeah,
for me to start reloading.
yeah.
As hopefully they do. But then it's going to take a bit of a stubborn dollar as well. It's going to be a decent dollar week, I think. FOMC is one thing. Then you got expected treasury announcement, but then especially the jobs reports towards the end of the week. I think that's going to be the big ones for the dollar.
Okay. Yeah.
Um, yeah, and then
Okay.
we should know how we end the week on those US yields, on the rest of the dollars. It's also, for those metals, it's the end of Passover, right? And
The 30th, yes.
yeah, so this week, I would keep an eye on risk as well. What
You
happens
know,
after?
that's I was gonna bring that up today. So that very heads up of you that
Yeah.
Passover, just like Iran waited for Ramadan to be over
Mm-hmm.
before they launch an
Mm-hmm.
attack. Anyone who thinks it's just a one-off between Israel and Iran, I think is naive. So, I agree. You have to start looking for geo
Yeah.
risk in May.
So this week
Um,
can see a few pitfalls. It really, and especially then the second half, right? Starting Wednesday, new month, and after the Passover, and then we have the Fed, and then we have that. But I
Yeah,
think
while
in
we,
order of importance, all else quiet or equal, I would say to me at least, the jobs report is more important even than the Fed meeting, which should be in theory an autopilot meeting this month.
okay. We're still getting some corrective action. Well, I'm calling it corrective.
Yeah,
This bounce in
51.35.45, huh?
S&Ps. Yeah, 51.50 was a big area. Remember, I showed the weekly and it broke down under 51.49. So this is kind of a natural. And just to, you know, put it in perspective, it doesn't always happen, but you know, we had an inside week last week, right? We didn't take out the prior week's low, held Friday's lows, and have an inside week. So the most bearish thing S&Ps could do is take out last week's highs, which I think we're doing, and then take out last week's lows because that's the off number, and have an outside week down after an inside week. So
We still have
I'm looking.
pretty important results coming out this week, have we?
Yeah.
Okay.
There's a ton of earnings.
What I
Yeah.
found
Apple has
interesting,
earnings.
yeah, what I found interesting in the whole exercise and just monitoring interventions versus risk is absolutely zero correlation this time. So we may have expected some other stuff to move in sympathy with the yen, but nothing of the likes happened. Actually, risk is doing quite okay on the back of intervention. So. Well, not on the back of, but next to those interventions. So that I think that was an interesting monitoring as well. I would have thought there would be more moves in potentially risk-related currencies or so, but it's not happening. And actually, they're all doing pretty well. Copper is higher, stocks are higher, antipodians are a bit.
I think you sell NASDAQ up around 18,000. Wrong over the high of the move. So I'm looking at this as a B wave, or a failing rally. You could call it whatever you want, but I think it's, kind of an opportunity that we held and bounced, and now yields are coming down. At least it looks like them so far. I think you have to sell this rip in stock indices. And TLT again, are we going to close back inside here? We're in it. Here it is. What do you
Yeah,
think?
the European rates as well have been coming back, so could be.
Yeah.
And so, well, I mean, unless we get a bit of a surprise on the U.S. Treasury announcement, also, it looks as the yields want to settle a bit before the next move.
Okay. Well, if we're going to get a turn in yields, it's going to be a big turn because
Jobs.
well, yeah, jobs. I think that'll be it too, and maybe we don't get back inside this formation, but we start taking out 92. Why not look for something like this from here? That could take you up to 104, something like that. So this is key. What's
Yeah,
going
we
to be
have to be.
interesting?
Yeah,
Go
I
ahead.
think we have to be really monitoring those jobs very closely because they
Okay.
could be the catalyzer for really quite big yields and bond swings.
Yeah. So I'll see you Friday.
Especially if it would miss this time.
I'll see you Friday.
We'll see each other on Friday.
Yeah. All right,
We'll
everyone. Have a great day. There's really, we have to wait for Friday. All right. So anyway, we're just, it's mental masturbation until Friday. Anyway, any view on Canada?
Nope.
Okay.
Where's Canada? I've forgotten. Does it exist?
Yeah, it does.
I got views.
You got views? Go ahead.
Oh yeah. And good morning, Dale.
Good morning.
Good morning, Ryan.
Blake.
Good morning, K-Man.
Morning.
Yeah.
Yeah,
That was giving us the week off, Blake. That was giving us the week off.
So yeah, Dale, I've been up. You can appreciate this. I've been up since 1:55 this morning.
Oh, trading BOJ.
Well, yeah, I got up and I got up in the middle of the night to, use the
Yeah,
restroom.
I
And
know. Yeah.
I was like, well, since I'm up, I should see if the dollar yen is still at 160. And then I looked at quotes and I'm like, uh-oh. And then, I'm like, well, I guess I better make some adjustments here. And then next thing you know, I'm like, okay, well, I'm wide awake. And yeah,
Yeah.
I'll pay for this one a little bit later.
Yeah, I've
Yeah.
done it. Yeah.
Chuck mentioned the South African elections are May 29th. Yeah, I know, Chuck. I actually posted in the week ahead video a correction there. I was like, yeah, I was wrong. I was a month off, and that was actually Catherine, who's in our community for the last 5 years. She mentioned it to me, and I'm like, oh shoot, I read the wrong date. So thank you, Chuck. Yeah, I already mentioned that on the week ahead video. But yeah, Dale, I'm looking for dips down to 136. I mean, that's where you got to be buying. Plain and simple.
Okay.
I've got orders there. They'll be there all week. Just waiting for any dip down to 136 because I want to be on the long side. So that's
Okay.
it. Yeah,
You have objectives, should it play out to take out this high?
yeah. I think we just reach back up for those. That's a big range high. Although I think that we eventually break 139, 140. I don't know if I think it has more to do with what the dollar is going to do near term, and I am a little worried about, all the things that are happening this week. We have the Fed, we have non-farm payroll, we have the QRA, right? That the quarterly adjustment for, see what treasuries are going to be hitting the market, if there's going to be any adjustments to maturities. So all that stuff could really drive the dollar. But I still believe in buying dips, especially while the dollar index is above 105. There's no reason to be on the short side of the dollar yet. I mean, I'm talking about the dollar index as a whole, not dollar yen specifically.
I have that line in there too, that this 105 level was big.
Yeah. So look here. I'll show you, Dale.
Go ahead.
This is like, in my opinion,
This looks, and the last 3-4 weeks action just looks like consolidation to me. I miss tops like that if they just move sideways and then eventually roll over, but it's not the classic type of topping action. One more thrust would be out of this triangle could be terminal. So, that's what I'm waiting for to sell.
Yeah, I mean, so sorry, I have to restart everything here on my charts. My bad. So excuse me 1 second. I accidentally cleared my I cleared my all my
charts,
the history from my just to clean all the cache out of my computer, because that's one of the things I did while I was bored this morning. And I'm like, oh shoot, I need to log back into everything. So I haven't had a chance to do all that yet, but I'll just draw it for you on this chart. It's real simple. So this is a Gartley harmonic, which we've talked a lot about. Yeah. Right. That suggests a reversal. So, whoops, I didn't mean to do that. I was going to pull the chart over a little bit. So if you look at the breakout point here is at 105.10, right? And then on top of that, if you look at this chart more near term, this is just a bull flag pattern. Yeah. So this is exactly what I covered on the week ahead video. It's real simple here. From a what do you want to do perspective, you're either bullish on a breakout above 106.20, right? Or you're bearish below 105.10. I mean, it's pretty simple. And I think we're going to find out what we need to do with the dollar. In the meantime, while we're not breaking down, my idea is just be long Dollar-CAD as long as we're above 136. So any dip down to 136, that's where I'm going to be a buyer. I think it's a really key level of support. There's no real reason to be on the short side, with the Dollar-CAD. And if you go over to just the daily chart, you can see the multiple times that we broke you know, or tested that level before we actually got a daily close above 136. And after that, it was off to the races. So, you know, now, simply put, you know, that's a 618 retracement right here at 136. So there's, you need to buy dips down to there. And now if you get below 136, then you're looking at a dollar-CAD that's probably going to trade back down towards range lows, which would be maybe 132, 133. But it all is predicated on what happens with the dollar, I think, overall. I don't think there's any like Canadian data that's going to be driving us. I think it's all dollar driven this month or this week, excuse me. So anyway, hey, real quick, you know, since you guys, we haven't really had a chance to talk a lot about it, so let's discuss it. And let me clean up my charts a little bit here and get back to my my account. Give me 1 second. Ryan, let's get your thoughts about the BOJ, Ministry of Finance, what the dollar yen was doing, and as I'm signing in here. So just give me 1 second. What are your thoughts about everything?
About everything. Well, not much more than what I said at the start of the show. You know, we're in watch mode now. You know, what's going to happen is are we going to get a quick return up towards those 160 highs? Is the market going to try pushing the buttons again? Or are we going to see a couple of days, a couple of sessions where, you know, the tree's been shaken, we need to let the leaves settle a bit before we know what's going to happen? The fact, I think your marker at the moment is 155. If we get below that, then maybe we're on for a little period of weakness. But I don't think we go too far because we've got the Fed and all this data coming up this week. So, you know, we're not going to go too far one side or the other. I think the market took an opportunity. Bank holiday in Japan, knows we've got the Fed coming up. Let's see if we can get some action going in low liquidity levels and, you know, take it from there. But no one who's been buying it 150, 152 is worrying about it.
So, I mean, I gotta ask you guys this, and you know, I'm gonna sit here and just say that I don't think anything's changed. You know, we still look around, and K-Man, I'd love to get your thoughts here. I mean, but we look around at this move in the dollar yen. It's not like we've seen any type of well, we haven't heard of any action, but we're not getting any indication from the BOJ that they're going to step up any type of monetary adjustments from here. So why should the yen strengthen from here? I mean, theoretically, there's no real reason. I would argue technically, while we're still above 152, there's absolutely no reason to be on the short side of the dollar yen at this moment. Although, you know, obviously people look around and go, well, why is Japan even letting this happen to their currency? And I would simply just say maybe they're trying to import inflation. But what are your thoughts here, K-Man? Like, what should we even be thinking about longer term dollar yen going the other direction?
No, well, not right now. That's what I've been saying on most of the shows. 152 has to go below and hold below in a natural way without interventions to really start thinking about a reversal. Unless they decide to go in heavy as hell and say like 150 on the offer, bid S&B style at 120 in Euro Swiss, but and then hold it below 150. But they are not going to have a good time if they want to do that right now. So it's also the wrong side of interventions. When they buy dollar yen, they can just print yen and continue to intervene. And when they sell dollar yen, they have to, after a while, and I'm not saying they need to right now, they need to do something, whether it's selling bonds or make use of the swap lines, which they actually did in a very small amount last week, if I recall correctly. But yeah, for the time being, not a lot has changed because the 155 is where we were before the Bank of Japan. And I think they really went for, and that's what I said on the Flow Show as well. And when I woke up, the first thing I always look at is when did it happen? and it happened in the hour running up to the Tokyo fixing. So there's two things that happened for me. There was like perhaps end of month dollar yen buying, which should have been the case, and 160 barriers that have been triggered, in my opinion. So somebody took advantage of like really liquid conditions to get through 160, because it actually traded already well below 160 before they intervened, right?
Oh yeah, I mean we were literally, because I sat down just as it was happening. Because all my phone started blowing up, and I mean literally we were skipping 30 pip moves. It was almost like a capitulation type of move, and that's just very thin liquidity when it was happening. So yeah, I mean
that's just a barrier hunt, in my opinion.
Yeah,
to get the
exactly.
160 out of the way, and took advantage of that move to do it. So so the rest, if we assume that they started to intervene anywhere below 159 or so, it's still a very light intervention, and just trying to smoothen
Stabilize
things and
a little bit,
not let speculators get away with anything. Otherwise, we would be trading 170 in a pretty quick move. But so yeah, so far no change. I'd say just keep an eye on what's happening in about an hour's time when the New York markets open, because they did come on again at the European Open this morning. So it could be that they are tempted to just show their intentions or check rates also just at the US Open in about an hour's time. So that's the timing for now. Otherwise, yeah, I mean, there's very little to do here. I was short Friday night, took my profits this morning, and that's it.
Yeah, let's real quick, I want to show everybody this just so you guys can see it. So if you can't see this weekly chart, this is the 127% extension, comes in at 159. If you look at this last move lower on the weekly chart, right, we hit the 161% extension. It was a confluence between the two. We discussed that quite a bit over the course of the last several days, but I want you to zoom out a little bit and just make sure that you all see that this high right here, we came within about 5 pips of that. That was the 1990 highs, right? So now if you think about, if we get a sustained break above 160, this move right here at the previous lows would be 177 and change. And it's not like someplace we haven't been. I mean, that takes us to October of 1978, but there's definitely room to run. And I have to just continue to point out here that this is a wedge pattern, and it's a bullish wedge pattern at that. And we can see it clearly on the 6J as well. And I think you have to respect that. That means while we're above 152, just be really, really careful. I mean, I took some losses trying to play the yen the other direction over the last couple of weeks. I actually closed out my last yen long this morning at like 2 o'clock in the morning. And I'm going to, stand aside and just understand that right now there might be some intervention, there might be some standing in the way, but until we really get some definitive price action, let's say back below 152, or you start getting some serious change of tone from Ueda and company, you have to imagine that it seems inevitable at this point that we eventually break 160 and try to make another charge higher. It may not be today, it may not be this week, it may be over the next couple of weeks, as the officials are trying to slow down this move. But it's still pretty bullish. I mean, Ryan, do you see it any other way?
Very bullish.
Yeah, very, very bullish.
Yeah. So anyway, it's very now. One of the other things we'd have to see, and Dale was pointing it out this morning on TLT, is we're seeing a little bit of a move there. And so, whoops, let me forget this chart. Let's go over just to take a look at yields really quick. If you see, U.S. economic data weaken substantially, and you really see a reversal on yields, maybe that'll be, the catalyst or one of the catalysts that help drive the dollar yen lower. But right now, yields still look strong as well. So Now we have Dale has an interview here in a few minutes. Let me ask you this, Ryan, and then we're going to go to Cayman really quick, just 1 minute each. What's most important for you this week moving forward? Fed, NFP, or the QRA? What do you think, Brian?
Right, I'm going to take it off that and say the UK local elections that are coming up on the 2nd.
Oh, okay. All right. Well, then on the 2nd, that would be on Friday, right? No, Thursday. Okay. Then
Are
we
you
will be
running,
watching.
Ryan?
Sorry?
Are you running for office?
They
'Cause
can't
that would
afford me,
make
Dale.
it real important.
They can't afford me.
All right.
All right, K-Man, what do you think real quick before we pass it over to Dale?
Main event of the week,
Yeah.
besides any potential interventions, jobs report in the US.
Okay. All right. Very good. And I think I'm in the camp that we need to be watching the Fed kind of carefully here because we have 5 meetings left after this one, and where they're going to squeeze in rate cuts is I think everybody's trying to figure that out. And like I said, with 5 more meetings coming up, we're running out of time. So I think the Fed is going to be a market mover as well. So lots happening this week. Thanks, guys, for being here. Even though I heard you on the Flow Show this morning because I was up so early, I had an opportunity to listen to the Flow Show. If you guys don't know how to find that, just go to ForexAnalytix.com, go over to where it says webinars, and you can listen. You can register to listen to the Flow Show every day with Ryan and K-Man. I got a chance to listen to it this morning. It was awesome. Dale, have a great interview, and I'll see the rest of you on the Morning Edge. Those of you that are in the ForexAnalytix community, I'll see you on the Morning Edge in about 45 minutes.
Okay. Thank you, Blake and Kay and Ryan. Thank you. Looks like you had
Thanks,
a good
mate.
time at the soccer game. Was that in
Yeah,
the UK? Steve
Yeah,
flew to the UK? Yeah.
Yeah, he was in the UK. That was my home team, and I took him and his family along, and they enjoyed it. Saw some goals. We didn't win,
Cool.
but yeah, it
Yeah.
was a good day out.
Yeah. All right. You guys look like you were having a good time. Okay. Well, thank you, team.
Thank you, Dale.
The dream team. The dream team, everybody. Okan, will you please accept a promotion from me to become a panelist so we could talk and catch up?
And if you, I'll try to.
I got him.
You got him? Okay.
Yeah. You're right. Sometimes they don't see it, and that's why that happens. So
yeah, looks like he's coming over. All right.
Yeah.
Have a great
All
interview,
right.
Dale.
Thanks, man. Okan, great to have you back. It's been a while. How are you? Asking you to unmute.
Yeah. Can
There
you
you
hear
are.
me well?
Yeah, I got you now, Okan. How are you?
Oh, I'm very good, Dale. Thank you. I have a background noise. If it doesn't bother you, I'll be happy. It doesn't bother you any
No,
the
it's not too
background
bad.
noise?
It's not too bad.
Oh,
Where are you on your construction job?
no, no. You caught me. You guys caught me outside, so I had to
Okay.
stop somewhere, and I'm doing my presentation from.
Okay. So, do you want a screen share?
Sure. Yeah. One second.
Okay. So tell me if my memory is right. Last time we were on, you wanted to buy the euro about 106. And then, you also said that the market equities would consolidate into the end of the year, and that was a parabolic consolidation. And then you had a little shift, change of heart on the euro, that it was going to rally first and then come down to the levels. Do you like it here from 106?
Yeah. I like it from here because I have some reasons which I'm going to share with you in a moment. I
Okay.
think
Oh gosh, you have a whole presentation. All right. Well, I'm going to shut up then and let you go ahead and talk about it. Do you think there's any shot that we could take out 106 one more time and then hold the 104?
maybe.
Yeah. Okay.
Yeah, maybe. But what I think is investors I hear out there are saying that the euro dollar might go below par, which I think is difficult. And I'm going to present you the reasons why this.
The euro likes gold beneath what?
Some traders, some investors mentioned that they claim that the euro dollar may go below one, the par.
Oh, okay. Yeah. All right. Yeah. There's always those, sub parity bears because Europe, the monetary union can't work. They're in recession.
Yeah.
Just like there are people always calling for the destruction of the dollar, probably just as many calling for the destruction of the euro over the years, right?
Yeah, but I think that is very unlikely for the moment. The reason why some investors are thinking that the euro dollar might further go down is because
The interest rate differential.
exactly, the ECB is going to cut the
Yeah,
rates. But
right.
well, if the ECB is going to cut the rates, that's a good signal for everybody that the Fed is going to do the same too. And so is the Bank of England. So I mean, I cannot imagine a world where in this kind of a situation, where the Fed and the Bank of England and the ECB diverge from each other for a too long time. And so I think that if the ECB uh, is giving signaling that they will cut the rates, then why not the Fed is going to do the same? And I want to starting from the first page of my presentation. If you look at this chart, you're going to see the DXY in the red and unemployment rates, which is on the bottom, the blue one, and the PCE core inflation rate. Uh, the, the Fed has announced recently that they're looking at the PCE core inflation rate more than before. And if you realize that the PC core inflation rate has been rising while if you notice that the unemployment has been falling, so this is pretty bullish for the dollar index, right? And that's
Yeah.
the reason why the dollar index has been going up lately, right? And
Yeah.
I think that this is a good reason why the dollar is increasing. But is this going to continue? That's the question, right?
Right.
I mean, for example, look at the unemployment. How far can it go lower when the market is still expecting slower economy. Why I am saying slower economy is because if the yield curve, the dollar yield curve is still looking down. So
Yeah.
if the yield curve is still looking down, I cannot imagine the unemployment going down any further. So the next move of the unemployment is going to be uh, to the up direction, right? So that's why the next unemployment figures may not be as bullish as before.
This Friday. That's this
So I
Friday.
think that, all right,
So
exactly.
you think there's a
So wait
surprise
for the
coming
Friday.
Friday? Okay. Wait for
Well, not a big
Friday.
surprise, but at least, yeah, but not a big surprise though. I mean, at least I would imagine that the unemployment is going to go, it's not going to go down, right? So it may maintain the level or it may increase just a little bit. So this will give the dollar bears a good reason to go into the market. And can I then go
Okay.
to the next slide?
Sure. Go ahead.
Okay. And well, look at the financial conditions index, which is, I think, it is being announced on a weekly basis. And if you see the financial conditions index, which is in the blue, which is
Yeah.
blue line. Let me make sure. No, it's
The
the red one.
orange.
The red one.
Yeah. Yeah.
Yeah, the orange one. Yeah, that's the
Okay.
financial conditions index. the financial conditions index are getting looser and looser. I mean, it peaked around the March, and starting from March, it has been going down, and I think that's the maximum level which this index is going will be seeing. The reason is, well, I believe
We're
that the
headed
financial
we're
conditions
headed towards
are good.
recession later in the year. Recession watch on for you.
Well, I cannot say it's a recession, but slower economy, I would say.
Okay,
Slower
got you.
growth. Not
Okay,
not a recession, but a slower growth
okay.
coming. So
All right.
if you can see, the financial conditions are getting looser and looser. So if the financial conditions index get loose, then the dollar index will fall, because uh, financial conditions index being looser, meaning that there will be more money available in the market, in the economy. So that's a good signal for the interest rates, right? The market interest rates, the treasury yields to fall.
Well, gold certainly made hay out of the March peak in financial conditions.
Yeah, exactly. So when the financial conditions index is going to fall, which I think it will, and then
Okay.
you might expect
The
not
dollar to
if
fall.
not the gold, if not the gold. Yeah, the dollar will fall definitely, but the gold will increase too. Yeah, but I think that the silver is going to increase more than that. The
Okay.
silver is going to perform much better than the gold when the dollar index starts to fall. So if you want to trade the gold and silver based on the where the dollar is going, so it's a good idea to look at the financial conditions index, right?
Yeah.
And that's very high frequency data. It's weekly data, so you can look at it.
Okay.
All right. If I go into the next slide, I look at the DXY from the gold silver fundamentals point of view. This blue line here is representing the DXY, the gold. I'm sorry, the dollar index. And the white line is indicating the convenience yield differential of the gold and silver. That is, you take the gold silver convenience yield and you take the silver convenience yield and deduct it from the gold's convenience yield, you get this line. And I mentioned many times before that the gold silver
Ratio.
has a very the gold silver ratio has a very strong correlation with the DXY, right? So if the
Yes.
gold silver index rises, the DXY rises. The gold silver ratio falls, the DXY falls. So well,
Okay.
it doesn't happen all the time, but the probability is high. So
Got
I
you.
see from this line and this white line, which is showing you the convenience yield difference of the gold and silver, is that it might start to fall. So the convenience of holding the gold will be less than the convenience of silver, holding of silver.
Got you.
So the golds,
So the gold silver ratio, I don't know, it's trading in the 90s. Should take
right,
should take a hit down
exactly.
towards what, 40?
I cannot say that exactly,
All
but
right.
at least
All
about
right.
3 to
70.
5%.
Okay.
Maybe, yeah,
Okay.
maybe.
All right.
Right.
That's a nice look.
So that's from the convenience yield point of
Yeah.
looking at the
Okay.
gold and silver ratio. So I think that from this, if you follow my cursor, I think that this line, the white line, is going to
Gonna
start to
converge.
fall. Yeah, it's going to fall a little bit, and the dollar index is going to follow that.
I see. Okay.
Downside.
All right.
And
I
my
love the
last,
way you look beneath the surface of the market.
thank you. That's what I'm doing is looking at the fundamentals. That's all.
Yeah. Yeah.
And finally, the gold silver fundamentals, I continue to show that, well, it should have been something different. It should be
Were you surprised? Were you surprised at the? Were you surprised at the move gold and silver put on while the dollar was still firm and going up?
Well, of course, that's a possibility, but
Well, I mean that happened. That happened. Yields were going up, the dollar was going up, and gold and silver were going up. They all got to pretty high levels of bullish sentiment in the 80s, 90s, all three of them at the same time, which to me I haven't seen in a long time. The dollar, gold, and silver, people being bullish, those three together.
Of course, there can be times like this, but I think that's a bit unlike, and let me show you why. If you look at the net speculative positions of the gold, all right?
Yeah.
This is the white line showing us the net speculative positions, and the red one is the gold price. If you look back into the beginning of 2023, last year, it has peaked around this level, right? Which is about it's about 215,000 contracts long. And since then, the number of contracts didn't go too much. So this is kind of the top of where it is. It can go. So if I assume that this white line, which is representing the net speculative positions of the gold, if it's going to start to decrease a little bit because of the dollar is getting stronger, then you might expect, you might expect the gold to start to go down just a little bit, about maybe $100 and $150, maybe towards to $2,200.
Okay.
So, and it's very likely.
Okay.
After all this rally, it's really like
2250.
I mean,
2200.
yes, the dollar is strong.
Yeah, got it.
Yeah, right.
So if we had one more dollar rally, that would happen.
Well, yeah. If we have one more dollar rally, which is possible. I mean, I can't say that the dollar is going to start to fall from here from today, but maybe in about 2 weeks or 3 weeks, it might start to fall.
Okay.
And maximum, that's maximum.
Okay.
And if that becomes true, then the net speculative positions will also fall. If not too much, but at least just a little bit, at least to the point where the investors don't buy gold anymore. So they look for a reversal towards $2,200 level in the next 2-3 weeks. That's possible. So in this case, I wouldn't say that the gold, silver, and the dollar might continue to increase into the future, at least for the short term.
Okay, got you. Nice
And,
stuff.
And if I show you the last
slide
presentation, the last slide, yeah. You're looking at the U.S. real rates, which is the white line. That's the expected U.S. real rates. That's the expected one. And the blue one is the dollar index.
Okay.
You can see that the real rates has been increasing from the beginning of March until today.
Yeah.
The reason why this has been so is because the inflation expectations have been going down. Why? Because the U.S. real rates are calculated by I'm going to write here. You take a treasury yields.
Yes. Versus
minus break-even rate.
Okay.
If you do this, for example, if this is 2-year treasury yields, 2-year treasury yields, then you take the 2-year break-evens. The 2-year break-evens, you get this line. And well, this line has been going up. Why? Not because the treasury yields were rising, because the break-even rates were falling. Yeah, this one was. Why? Because people started to expect less inflation in the future, so that's why this has increased this differential.
They were wrong-footed. They were wrong-footed, looking for 6 cuts, and now they might be wrong. Now they might be wrong-footed the other way, and accepting that there may be no cuts. So we've gone from one side of the boat to the other.
But you know, Dale, what is interesting is when the break-even rates fall, all right, the dollar falls. When,
So this is a big week for.
So I'm sorry, that's the opposite.
Okay. What do you expect from the refunding?
So it means
you think that'll have some
fall,
impact? That comes out, I think, in a few days. The Treasury refunding package, because that did provide a turn last October. Remember when they put more of the debt in the short end of the curve rather than the long end, and we had a big bond rally? Do you think something similar is setting up here?
Might happen because nowadays when if that's not the case, otherwise, if the yield curve maintain too much of steepness, then it's not good for the economic expectations. So that's why they might want to put some pressure on the shorter ends of the chart.
Okay.
So
all right.
and that's negative for the dollar. Yes, that's negative. That's going to be negative for the dollar.
Do you think the yield curve inversion is starting to shift and that we could be moving towards steepening, even if rates come down? They fall faster on the short end than the long end.
Might be because I think that somewhere down the road, at least until the end of this year, because we're almost at the middle of the year. I think starting from there, we might see some weakness in the economy. So that's why I think that's when that happens, the short end of the yield curve is going to fall, which will make the curve a little bit more flattened.
Okay, when rates fall, here's the key question. Is it going to be because of risk off in equities, or is risk going to like it that rates are starting to fall?
I think that's going to be because of risk off.
Okay, all right.
I think
so instead of people going, your yields are finally coming down, that's bullish for stocks. The catalyst might be stocks under pressure that turns yields down as people. So the bonds behave like they used to in the old days. They're not a risk asset. They're a flight to quality asset for a while.
If you're asking from the stock market point of view, Dale, I would say that the stock market might be under pressure for some time. You know, the reason why is because if the yield curves start to flatten, it represents a uncertainty. So
it represents what?
We know that when the yield curve uncertainty.
Okay. Yes. Okay.
From the stocks point of view, because the more flattened it gets, the more flattened it's people are become uncertain about whether they should invest for the short term or for the long term. They are undecided. That's showing you that picture. Well, that's a risk off from the treasurer's point of view, but that's going to be a risk on from the stocks point of view because of this uncertainty.
Oh,
Uh,
you mean stocks will could continue higher, but bonds will fall and
no, just
yields go up?
the opposite.
The opposite.
The opposite.
Okay.
The
Okay,
opposite.
that's what I thought,
Yeah.
but that's not what you said. So anyway, anything you want to wrap it with, Okan? And I want to thank you in advance for a nice presentation
Yeah.
and giving us some things to chew on.
I put my last words here. I just want to wrap it up. So
Okay.
I think that these are going to happen. By the way, I mean, for example, if the core inflation index if it fall while unemployment does not fall any further, it's going to be not. Sorry, if it does not fall any further, right? And I think that the dollar is going to go down. If the financial conditions index start to fall, I think the dollar is going to fall. If the convenience yield difference between the gold and silver, which is gold minus silver, I mean, under 0.050, 0.005, it should be 0.005, which is the one that's here.
Okay.
Here.
It favors silver over gold.
It's right. Exactly. And finally, if the inflation expectations increase while the 2-year treasury rate stay relatively lower, then we might expect the dollar to fall in the coming weeks and months.
Okay. I have a target if we're peaking up here below 107.40 or so. First 105 in Dixie has to be taken out. And then 103.80 was a big number for me. And if we take out 103.80, that gets you into the par level and we'll be on the verge of breaking under par. How about 95 for a target in the Dixie?
I think you mean for the euro dollar, right?
No, I'm talking about the Dixie. I'm talking about the Dixie. First breaking under 105 is the first sign. Although I'm hoping we get one more shot up towards 107. But under 105 is ugly. Under 103.80 is uglier, which takes us back to the par levels. And then I think you're looking at a breakdown where we go to at least 95. Do you see that?
Oh, you're talking
Hello?
about the dollar. You're talking about
the
the dollar
Dixie.
index, right? Okay, okay,
Yeah.
okay. Well, I think that I think at the maximum level that we can see in the next let's say about 8 months, we might go as high as maybe 107, 107 maximum. I mean, I would imagine going up to 109 or 110.
Okay. Well,
that
right.
would be difficult.
I'm asking about the bear market move. Once we start declining, is 95 a viable target?
95 is exactly a viable target because I think that if I switch to the euro dollar, I think that it might be
120.
associated with one. Yeah, it might be associated with 120 or something.
Okay.
So
All right.
95 is the
Okay.
target. Yeah. I
Okay.
mean, which I think it will. I mean, I am very positive on that. I am very bearish for the dollar the long term.
Yeah.
So
Got you.
120 euro dollar and 95 Dixie is the target for me.
So will they start calling it the U.S. lira?
US, take it, please.
Lira.
Yeah, lira is, yeah. Yeah, Turkish lira is
No, will they start calling the dollar
it's not
the U.S.? Will they start calling the dollar the U.S. lira?
oh,
All
the
right,
US
you don't
lira.
get it. You don't get it. All right, that would mean like,
I didn't
the
get
lira
I
has
didn't
been
get
the weak in a currency crisis for years. So I'm just saying, will they call the dollar
Yeah,
the
I know.
lira? Okay. Now, if I have to explain my
Yeah.
jokes, they're no good. Anyway, let me ask you, Do you want people to follow you or get in touch with you someplace? Is X the best way for them to follow you? And if they have questions or they're interested in what you do to pursue it
Sure.
further, how would they do it?
Yeah, I will be more than happy to help people if they contact me at my Twitter, at
And that,
sign Okan Aybar.
yes, his name.
Uh,
Okay.
yeah, it's all my name, first name and last name together, Okan Aybar.
Anywhere else?
Yeah, sure. They can contact me at LinkedIn on the LinkedIn.
LinkedIn? Okay.
Yeah, I'm
Should
on
follow
LinkedIn.
should follow me. We should follow each other there.
Yeah, sure.
Okay. So Okan, I always like your um, you know, your narratives. They, confirm or make me think twice about what I'm considering in the markets. I want to thank you. You've been coming in for years now, right? Been a few
About a year,
years.
yeah, more than a little more than, yeah.
All right. Well, I want to thank you for
Exactly.
sharing your hard work with our community and edifying them.
Thank you. I appreciate it.
Okay. Okan Aybar, everyone. You could find him on X at Okan Aybar. It's spelled OKANAYBAR. A good guy
Yeah.
to know what a great analyst. Okay, to know what he's thinking fundamentally. It helps, even if you're a technician, to have a good bias to trade with. So thanks again, buddy. Appreciate talking to you, and we'll get back together in the summer. See
Yeah,
how
sure.
things play out. Okay.
I'll be more than happy.
Okay. Okan Aybar, everyone. And that's a wrap for me. You could join the team in 14 minutes on the Morning Edge. People are thanking you, Okan. And
Thank you, everybody. Thank you.
and I'll see everyone tomorrow for Turnaround Tuesday. Don't just count your pips, count your blessings. Adios. You're very welcome, everyone. See ya. Thanks, Okan.
Thank you.